Good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And certainly this week, there is quite a bit going on as far as the broader markets. Earnings season is due to kick off. So we'll take a look at some of that. But let's take a look at what else we are going to be covering here today. The first, as usual, we're going to go ahead and look at the current markets. And of course, we are hitting all-time highs. Super exciting. We'll drill down beyond that because you want to know where the strength is beyond the broader markets. And this is with an eye toward taking advantage of that strength with an expectation that it will continue to carry on. And then also we're going to take a quick look at gold. There's been an awful lot of strength in the gold market, the dynamics, the reasoning, why that's in place, and how you can potentially take advantage of the outperformance that we've been seeing in those gold stocks. We're also going to do a new segment, and it is thematic plays in a technologically changing world. And as technology evolves, we're seeing a lot newer ways that things are happening. So today we are going to take a look at some changes in the world of restaurants and how you can dig in and look at some of those stocks there. And then also, I talked about earnings season. Stocks are due to begin. We're ramping up here. We're going to take a look at some of the larger cap stocks that are due to report earnings this week, what you'll need to be on the lookout for with those stocks. So let's go ahead and get started. As mentioned, the first item that we are going to go ahead and take a look at is the broader markets. And I'm going to go ahead and take us over to a preset screen here. And here we're looking at the S&P 500. This is a daily price chart. And what I want to show you here is the fact that the S&P 500 hit that 3,000 level last week. And that was a psychologically important area and a value, and we did go ahead and hit it and advance beyond that. So certainly there are those that believe when the markets hit a new high in price, that is when we will fall apart. But when the markets hit a new high, it's really important to also pay attention to sentiment as far as investors. Is bullishness at an all-time high? And interestingly, as the markets hit that peak last week, there still was a fair amount of bullishness languishing out there. So that sentiment is actually the fact that everyone is not super bullish, is actually bullish for the broader market. So there is an anticipation that we could see easily these markets trade higher. Let's take a look at some of the indicators that I have overlaid on top of this daily price chart of the S&P. We can see this green line upward trending. That's your 10-day simple moving average. We want to see this not only in an uptrend, but the broader markets finding what I call support. You can see where it'll pull back, bounce, pull back, bounce off of this upward trending shorter term 10-day simple moving average. That's bullish. The red line here is your 50-day simple moving average. This is for a longer term prognosis in the sense that if we see a break below that 50-day simple moving average, the markets are not, what I say, finding support. And in fact, they do have a probability of trading lower. We're in good standing there. And then up top, I have what's called an RSI. That's your relative strength indicator. You want to pay attention to not only the slope, but also the position. It's above this 50, which is neutral. So that's positive, and also the slope is upward. So we are in good standing with that RSI. And then down below, we have what's called a moving average, convergence, divergence, another momentum indicator. We had that crossover back here in June following this May correction in the broader markets. We in beginning of June, this black line crossing up through the red, that is bullish. Then we also want this MACD to cross above this net neutral zero and trend upward. So by all accounts, the markets are in a confirmed uptrend. which is, of course, very constructive. Now, the only potential hiccup, if you will, is the fact that we are due and we have ramped up here with earnings season. So when these companies, as they come out with their reports, as the markets are hitting a new high, that could present a bit of a bumpy ride. And the reason is it has everything to do with whether the companies come in, of course, ahead or below estimates. If they are priced to what I call for perfection, we could see deterioration if they disappoint. Let's take a look at a stock that came out with earnings last week. Simply as an example, this is a very large healthcare biotech stock, Illumina, ILMN. The company reported last week. Take a look at this drop. It dropped initially and continued to deteriorate. It was down 18%. But what I'd like to point out to you are the dynamics going into that earnings release. We can see that the stock had a very significant advance during the month of June. The stock had hit a new high in price. So in essence, it was priced for what I would call perfection. The report disappointed, and we can see this significant gap down. I'm not suggesting that this is going to happen continually, but it is a dynamic that you need to be aware of, more with an eye toward potentially not buying going into earnings. Had you purchased ILMN back here when the stock first broke out of this base, this gap down would certainly not, of course, would not have been as damaging. So again, not buying stocks that are hitting new highs going into their earnings release. So let's go ahead from there. Take a look at some of these other stocks that are due to report this week. These are going to be larger cap, better known names. This first one that I'm going to go ahead and share with you is Netflix. They are due to release. And we can see that the stock is pulling back going into earnings. And I would actually view this as constructive, again, because we're not just barreling up to new highs. And with Netflix, I will tell you that you are going to want to pay attention to subscribership. While earnings is critical, that subscribership number is also very, very important. And we can see up here that this RSI is just here at this net neutral, just breaking below that in negative fashion. Your MACD had that black line crossing down through the red. So we are seeing a bit of near-term slowdown in momentum going into earnings. So something to consider. The stock was poised to break out of a new high last week, and it did pull back. But again, I would view that as constructive going into their report. UNH is another stock that is due to report, and it's United Healthcare. This is a very large healthcare provider. We can see this big gap up last week, and that had everything to do with an announcement from Trump. Trump pulled back from his, he was going to go ahead and remove what are called the middlemen, the guys that go ahead and negotiate the drug pricing between the big behemoth pharmacies and the insurers. And he backed off from that. Super good news, because companies like UNH, they own those middlemen companies. So with Trump announcing a hands-off policy, these health insurers are able to then insure their revenue from these middlemen companies. So we can see this big gap up. The stock is continuing to advance beyond that. And then we are very close. If we get above this December peak in price, UNH will in fact be standing at a new high. They're due to report on Thursday. The other item that you want to pay attention to going into earnings is whether estimates are being revised upward or downward. If analysts are raising their guidance going into earnings, that actually is bullish, because it is telling you oftentimes these analysts will have a little bit more in the way of insight. They are speaking with management. They are really drilling down. They have their feet on the ground. They are they're this is their job to cover particular companies in a particular industry. So UNH, they are raising guidance going into earnings, which is bullish, but I would argue that the stock certainly is extended, making it a little more vulnerable to any misstep in their earnings report. Let's take a look at another large bellwether stock that is due to report this week, and that is Microsoft, a very large, of course, software company. And we can see that the stock has been in a very confirmed uptrend. And I talked about that with the S&P 500, where the indice is finding support at an upward trending 10-day simple moving average. Your other metrics are also quite bullish. Your 50-day is in an uptrend. So the stock is very clearly showing and exhibiting signs of outperformance, signs of strength. And again, this is going to be something to keep in mind. From my work, I would not be a buyer going into earnings, given that the stock is at a peak in price. Your other metrics are also positive. RSI, your MACD are up here above this net neutral zero. So it is something that you want to look at. This is another company, Microsoft, where subscribership is going to be critical component of the release of their earnings. And then we can take a look at another large cap stock that is due to report this week. This is a medical products, surgical, Intuitive Surgical, ISRG. And let me go ahead and pull up a full quote, and we can get a little bit more in the way of information. That's an area below the chart where you can just go ahead and click request that full quote. The reason I'm asking for that is because up here in the top, you can get not only the name of the company, but what industry group they are a part of and sector. So after this, we are going to drill down, take a look at the subsectors within the broader markets. ISRG is a part of the healthcare group, and healthcare has been lagging a bit, but we can see it is in good standing as far as technically sound. We have the price above each of these key simple moving average. When you have a shorter term, in this case, the 10-day simple moving average crossing up above the longer term simple moving averages, that is a golden cross. It is a bullish action, and it's indicating to you that the near-term momentum in that stock is turning positive. So we have ISRG in what I would say good standing technically. It is well below its peak in price back here in April, and we can see that the RSI is positive, as is that MACD. Now, bear in mind this break here back in April was earnings related. So you are going to want to keep that in mind. But of course, given that, we can see that the stock's price was at a peak going into earnings. This is that phenomenon where I talked about the stock being priced for what is called perfection. Any sort of disappointing news can be met with distribution. So we're in a different place here with the stock. Certainly well below this peak in price. I will tell you that analysts are revising earnings estimates higher for both this year and next. They're looking for 15% earnings growth next year. So that's another bullish factor. I talked about earnings estimates being revised going into earnings as being a signal that they very well may come in ahead of estimates. So I would keep an eye on that. And then one other name that we can take a look at, I'm trying to spread it out as far as sharing with you stocks that are in various different sectors. We're going to move over to the transports. This is UNP, a rail stock. And again, that can be identified up here. It's in the industrial sector, and it is a rail stock. Let's take a look at this, because we can see that the stock did respond to positive earnings back here in April. It gapped up, which was certainly, had you owned it, a good thing, of course, but subsequent to that, it has languished. A lot of these transportation stocks are struggling, rail stocks included, but we can see here more recently that it has reversed this downtrend. It is heading bullishly above these simple moving averages. Your RSI, your MACD are both positive. This is a case where analysts are revising the estimates higher for this year, down for next year. They are due to report on Thursday, so this could be a very interesting stock if we halt the uptrend here because we are below this prior peak. I'm going to go ahead and be right back. And from here, we are going to drill down and I'll share with you where the strength is in these markets so you can take advantage. I'll be right back.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Raschke, and Ralph Acampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
As mentioned, I'm going to take you to the markets and drill down a bit further. We're looking at the candle glance view. This is accessible on that front page interface on StockCharts.com. It will be populated automatically. From there, you can go ahead and input any number of ticker symbols, indices. As usual for today, I've gone ahead and put in the various broader market indices, Dow, NASDAQ, S&P 500, as well as the sectors. We're looking at technology, healthcare, financials, and so forth. I will drill down further from here. I'm going to go ahead and add an additional indicator because what we can do from here is go ahead, add that additional indicator, that 14-day RSI, relative strength indicator, and then sort that descending. And then what this will do is very clearly among these 12 indices and sectors, it will sort this list by strength to weakness. So we can see up on the upper left quartile, this is your strongest. And then it drills down over to here. Of course, this is Treasury yields, so it indicates weakest, but that is, we'll get into that in a bit. But let's take a look. Consumer discretionary up here in the forefront. And this has a lot to do when you're looking at these various sectors. You'll want to pay attention to what those sectors are comprised of, what the heavier weights are. Consumer discretionary is going to be all about Amazon. Amazon is a big heavyweight. Today, some of you may know, is Prime Day for Amazon. So the stock has been doing quite well. It was up about almost 3.5% last week, but it's not just discretionary stocks, and I'll share with you, we'll go ahead and be able to drill down and identify. It's not everywhere within discretionary that is working, but there are select areas. From there, we can see that the Dow industrials are showing and exhibiting superior strength relative to other areas. Technology, and I would argue that technology is leading the broader markets higher. There are a number of dynamics within technology. A big heavyweight here is going to be Apple and Microsoft. Those two stocks make up 33% of this XLK. And then from there, the S&P 500, which of course we talked about hitting 3,000 last week. XLC has really moved to the forefront. For many weeks, it was languishing down here in the lower, weaker quartile. A lot of this is Facebook, that's a big component, but also a number of internet-related stocks have really awakened. And with that, I would argue again that those internet-related stocks are technology-related and driven, so we are seeing tech leading these broader markets. And let's go ahead and look. I talked about earlier healthcare, and healthcare stocks did suffer last week. That Trump decision really hurt a number of the large pharma stocks because they're going to have the onus of making or lowering their drug prices potentially. So healthcare here in the lower quartile. We're going to take a look at gold in a little bit because gold we can see has been on a bit of a parabolic move, kind of settling in a bit here, but some of the dynamics that brought this uptrend here into place are still in play. So we'll want to see how we can take advantage of that. So this is that refined look into the markets and where these pockets of strength are, where you are going to want to seek out candidates are those groups, discretionary and technology up here in the forefront, as well as communication services XLC. So let's go over to StockCharts.com, sector summary here. I'm going to show you how I got to this listing because we're going to want to do this for technology and discretionary as well. On this front page, we have the member tools. From here, we are going to look at the sector summary. Now, initially, I'm going to take us to the gold area, and then from there, we can go look at tech and discretionary. So these listings initially are going to be by performance today. I'm going to want to go to the materials sector, and then from there into gold mining. That's an area that I talked to you about as having quite a bit in the way of vibrancy. So from here, the sort is going to be by performance today. We can then sort it by this StockCharts technical rating. These are going to be your most technically sound up here in the forefront. Now, I will tell you, a lot of these stocks, given the run that they've had, they are going to be extended. You can see by this thumbnail shot, these stocks are, a lot of them are hitting new highs in price. So for my work, these are going to be your leadership names, but these are not only smaller market cap, but they are extended. So we can then drill down a little bit further, take a look at some of these other stocks that are not quite as extended as potential candidates. Let's take a look at KGC. And we can see that the stock broke out. Now, this is that move in June that I talked about. A lot of these stocks really came to life back here in June, then broke out earlier this month. Now, I would argue that while the stock has had a significant advance, this is a very low priced stock. It's trading only at $4. Normally, I like to look at stocks that are $5 and above, but certainly for educational purposes, it is finding support at an upward trending 10-day simple moving average. And gold stocks will tend to get a boost as interest rates drop. And given the dynamics last week with Fed Chair Powell giving the nod toward a more accommodative Federal Reserve with an eye toward interest rates potentially being lowered at the Fed's next meeting. Pardon me. So I'm going to share with you some stocks that look interesting within gold. This is Kirkland. Ticker symbol is KL. And what I would want to point out to you here, the stock had that advance. It did participate in that June move. More recently, it has really settled. It is building a nice base, found a trading range, forming a little bit of a shallow base. And the stock is poised to break out of that base. We can see the RSI and the MACD are both positive. So this is one constructive candidate that I would point you toward as taking a look at. We can look at another one, PVG, a little bit of a smaller one, $2 billion market cap. Let's see if we can do this. And this is another one that had a big, solid move up here in June, built a base here, and is just now breaking out of a base. So that lower interest rate dynamic is there. You'll also want to pay attention. Gold rises if the dollar weakens. We're seeing a little bit of a weakening in the dollar. So those are your gold stocks. Let's go ahead and move on. I talked about a thematic item that we're going to look at, technological changes and how it's impacting different industries. So today, the first one that I was going to share with you were restaurant stocks. More importantly, are delivery services, these apps. There are about 25 different apps. Grubhub is the only one currently that I'm aware of that is public. We can take a look at this. It was a darling of Wall Street last year, fell out of favor. Now, this is in line with the broader markets, but it really is just now attempting to come back to life, if you will. And it's all about competition, tons of other various services that are offering this delivery service. Postmates is one. They may be going public this year. They're trying to decide if they should go public or sell to Walmart. But let's take a look at Grubhub here. This downtrend reversal. We've gone, the stock has broken up above these shorter term simple moving averages, constructive, but it's now finding resistance at a downward trending 200 day simple moving average. If Grubhub can get above that 80.5 level, and we see that move on any kind of volume, off to the races for this stock. The RSI and the MACD are both positive. So keep your eye on that. But let's drill down, take a look. McDonald's is partnered with Grubhub, a big beneficiary there. Take a look at McDonald's, super strong uptrend. We talk about stocks finding support at upward trending simple moving averages. We are in fact seeing that. RSI, MACD are both positive. So McDonald's looks great. They are at the forefront of utilizing those delivery services. Uber Eats is actually another public, I failed to mention that. Uber Eats is a huge component of this delivery space. This is a daily price chart of Uber, which is actually acting well. It's holding up quite constructively. But let's go back and take a look at another restaurant stock that was at the forefront. And this is more about digital ordering, not so much delivery. This is Chipotle. This has been a huge boost where you can pre-order your delight and then go pick it up. Chipotle is another one that has had, this is a gap up on earnings, continued to move upward. The stock is finding support at this upward trending 10-day simple moving average. RSI and MACD both in good standing. And then one last restaurant stock that I want to point out to you, because this company has been at the forefront. They really are all eyes on them. Believe it or not, it is Domino's. They are very progressive as far as their digital, not only their digital. Now the stock does not look that constructive, but we can see that it is down almost 4% on the day. But it is, if you were looking at news related items, it is a company that is at the forefront as far as their delivery and their digital marketing. So I'm going to leave it at that with that thematic. I only have a little bit of time here left, but I promised I would drill down into technology, share with you how you can get in front of that strength. You'll also be able to utilize these same tools within consumer discretionary. Back to that sector view, into the technology sector. From here, you're going to get the sub-industry groupings within technology. So we can see computer hardware, that's going to be all about Apple. Let's drill down, take a look at semiconductor stocks. They had a nice week. They were up about 3.3% last week. Now we are looking at those names that are in technology. From here, we can sort it by this StockCharts technology rating. Super powerful. It's presenting you with high to low. The higher the number, the better. These are your leadership names within technology. Really quite simple. There's no other way to say it. We can then look from here at advanced micro devices. This for sure is the leadership name. Take a look at this stock because we can see that it peaked here in June in price, faltered with the broader markets, and more recently is poised to break out of this 1 month base. So very constructive looking. RSI is positive. MACD is also positive. So really quite simply, this is how you can get in front of these leadership names given an industry group that you are interested in. Micron is another stock that we can take a very quick look at. These guys do data storage chips, which has been super hot of late, a bit extended. And when I talk about that, we can see RSI is up here above that 70 level, indicating that the stock is overbought. And also quite simply, the stock's price position relative to this 10-day, we can see that there's real estate there. So it is a bit near-term extended, but I would keep an eye on it because it's broken out at 44 out of this base. Your MACD is positive. So the stock is in very good standing. And I think we have time for one last quick stock. And that one that we can take a look at is Lattice LSCC. Take a quick peek at this one. And this is another one that is a little bit extended. I would look for a pullback, but it's certainly in an uptrend. And I will leave it at that. For those of you trading, happy trading.